What if I told you that the Great Depression wasn't actually about the money at all? Most people think it was. They think the crash of 1929, the bank collapses, the unemployment rates. They think all of that was about literal currency disappearing from the economy. But what if the real secret was something far stranger? What if the Depression revealed a psychological truth about money that we've spent the last 90 years trying to forget? You see, before 1929, most people didn't actually understand what money was. And I don't mean they were stupid. I mean they hadn't been forced to confront the uncomfortable truth that money is mostly agreement. It's a story we all agree to believe. As long as everyone keeps believing the story, it works perfectly. But the moment doubt creeps in, the moment people start asking, wait, is this real? Everything collapses. Not because the economy actually lost value, but because belief evaporated. In 1929, newspapers weren't filled with, "the money is gone." They were filled with psychology. Headlines screamed confidence. Buying opportunity, they said. Prices are coming back, they promised. The most successful investors and bankers in those days weren't the ones with the best mathematical models. They were the ones who were best at managing a collective narrative. They were storytellers. And when the story breaks, when enough people simultaneously stop believing, that's when the real destruction happens. The banks understood this better than most. What they realized, and what they made sure the public never fully grasped, is that their entire system depends on managed doubt. They needed you to doubt your own financial security, just enough to keep you obedient. But they couldn't let you doubt the system itself. That's where the balance broke during the Depression. People didn't just doubt their own savings. They began to doubt the entire framework. They asked questions that bankers never wanted them to ask. And here's where it gets really interesting. During the Great Depression, something remarkable happened in American households. With access to credit completely cut off, with the banking system essentially frozen, families had to do something the modern world has almost completely forgotten how to do. They had to understand the actual, physical relationship between work and value, because there was no safety net, no credit card to defer the consequences, no bank account earning interest while you slept. It was just you, your work, and immediate, tangible reality. Families grew food, they preserved it. They made their own clothes, repaired their own homes, traded skills with neighbors. And something profound happened in that process. They developed what we might call economic literacy, but not the kind you get from reading books about markets. They understood intrinsic value. They understood scarcity. They understood that money was just a representation of something more fundamental: energy, skill, and the transfer of real work between people. The banks never wanted anyone to remember this, because once you understand that value comes from work, not from credit scores or investment portfolios or digital numbers in an account, you become a different kind of citizen. You become someone who questions more, someone who's less dependent, someone harder to control through the subtle manipulation of financial anxiety. What the Depression actually taught, what was almost systematically erased from our collective memory, is that financial security doesn't come from having a lot of money. It comes from understanding the relationship between your own effort and your own survival. It comes from knowing how to make things, grow things, and trade skills. In the Depression, the wealthiest people in any community weren't necessarily the ones with the most cash. They were the ones with the most useful skills and the strongest relationships with neighbors. The modern banking system, the system that emerged from the wreckage of the Depression, was specifically designed to prevent this kind of thinking from becoming mainstream again. Credit was expanded. Consumer culture was born. The idea that you shouldn't make your own clothes, shouldn't grow your own food, shouldn't fix your own things. This became enshrined as progress. It's actually a form of social engineering. It makes you dependent on the system in ways that your great-grandparents would have found deeply unsettling. But here's what's really been kept quiet. The people who made it through the Depression, the ones who came out the other side without losing their minds or their homes, they almost never did it by trusting the banks. They did it by becoming what we'd now call resilient. They had skills. They had community. They had the ability to reduce their dependencies. These weren't revolutionary ideas. They were just practical. The memory of the Depression terrifies modern financial institutions because it represents a moment when millions of people simultaneously realized they didn't actually need as much as they thought they did. They didn't need new clothes every season. They didn't need to eat processed food. They didn't need mortgages on houses they couldn't afford. They discovered they could be happy, even in hardship, with community, purpose, and basic security. And that realization is contagious. It's one of the greatest ironies of modern economic history. The Depression was framed as a disaster for individuals, a failure of personal finance. But it was actually an incredible training period. It was a reset that forced an entire generation to understand something fundamental about how the world actually works. And the system that replaced it was deliberately designed to make sure the next generation would never figure that out again. Think about it. In the 1930s, a family didn't have financial anxiety about whether their investment portfolio would beat inflation. They had concrete, visible problems. The roof leaked. The garden needed work. The neighbor had a skill they needed to trade for. Solutions were transparent and immediate. Failure was also immediate and visible, which meant success was too. Compare that to modern financial anxiety, which is often about things you can't see, can't touch, and can barely understand. The system is deliberately opaque, and that opacity is a feature, not a bug. The banks didn't just want to survive the Depression. They wanted to ensure that the knowledge embedded in that period, the knowledge about resilience, skill, community, and the true nature of value, would become lost. They succeeded largely because they did something brilliant. They associated that kind of thinking with poverty. They made self-sufficiency seem like failure. They made working with your hands seem degrading. They made community-based trading seem archaic. In the years after the Depression, the banking system made a conscious choice to bet everything on perpetual growth and expanding credit. They figured out that they could make more money if everyone was slightly afraid and slightly dependent. A person with a mortgage, a car payment, and a credit card limit they're approaching is a very manageable person. They won't make too many waves. They won't build too much community resilience. They won't learn to fix things themselves. They can't afford to think too independently. And it worked. For nearly a century, it worked incredibly well. The narrative was so powerful that almost no one could articulate what had been lost. We forgot that our grandparents knew how to do things. We forgot that communities could be sources of security. We forgot that true wealth isn't just money in an account. It's knowledge, skills, relationships, and the ability to meet your own needs. And then something unexpected started happening about a decade ago. People started to remember, not through banks or official institutions, but through the internet, through communities, through a growing sense that the old narrative was breaking down. Suddenly, there was a surge of interest in growing food, learning to fix things, understanding the actual economy. It wasn't a coordinated movement. It was just millions of people, independently, deciding that maybe the Depression-era understanding of value and security wasn't actually obsolete. Maybe it was timeless. The real secret that the banks never wanted you to remember isn't about what happened in 1929. It's about what happened after. It's about the fact that an entire society learned something crucial about human resilience and then chose, or was convinced, to forget it. And it worked until people realized they were more afraid of their financial vulnerability than they were excited about their consumption. This isn't about romanticizing poverty or suggesting that the Depression was actually a good thing. Millions suffered. People died. Families were destroyed. It was horrific, but it was also revelatory. And the revelation, the part that banks spent 90 years trying to bury, is that financial security doesn't come from the system. It never did. It comes from you, from what you know, what you can do, who you know, and how much you've reduced your dependencies. Those things don't require permission from any bank, and that's exactly why nobody in power wanted you thinking about them. The second thing that happened during the Depression, and this is crucial, is that people rediscovered the difference between wants and needs. Not in some abstract philosophical way, in a visceral, everyday way. Your grandmother didn't have time to debate whether she wanted a new dress. The question was whether the one she had could be mended one more time. Your grandfather didn't wonder if he should get a hobby. He already had three: keeping the household running, growing food, and finding ways to earn the few cents that might matter. What's fascinating is that this clarity didn't disappear when the Depression ended. Not for decades. People who lived through it, they stayed different. They kept saving. They kept fixing things. They kept questioning purchases. And they passed this down. If you've ever had a grandparent who wouldn't throw anything away, who saved string and rubber bands in jars, who could make a meal from almost nothing, who seemed almost suspicious of brand new things. You were looking at a depression survivor, or at least someone raised by one. The depression taught people something that no amount of modern financial advice can replicate: the actual relationship between work and consumption. You didn't earn money as an abstraction. You earned it in hours, actual hours of your life. So when you thought about buying something, you weren't thinking about dollars. You were thinking about time. How many hours of my life is this object worth? Is it worth 8 hours? 2 hours? What could I do with those hours instead? This is something we've completely lost in our current system. Money has become so abstract, so divorced from actual labor, that we don't feel it anymore. You swipe a card. Money vanishes from an account you don't think about very often. The psychological pain of spending has been engineered away. This is intentional. Banks don't want you thinking about the hours. They want you thinking about the availability of credit. How much can you borrow? Not how hard did you work for it. Here's the third secret that the Depression revealed, and that the modern system has worked overtime to suppress. When everything collapses, community becomes currency. Not metaphorically, literally. In the Depression, when money stopped working, people traded skills. You need carpentry done? The carpenter needs vegetables. The vegetable grower needs childcare. The childcare provider needs her shoes repaired. Money was just the middleman in this process, and when the middleman failed, the network remained. This is completely terrifying to the modern financial system, which depends entirely on your isolation. You can't be interdependent with your community if you're constantly competing within it. You can't build local resilience if you've moved cities 3 times for work. You can't know your neighbor's skills if you interact with them twice a year. The system that emerged after the Depression specifically designed itself around preventing the kind of community networks that made the Depression survivable. The fourth secret is about debt itself, and this one is so simple that it almost feels stupid to say it out loud. Debt is only powerful if you care about the debt collector's opinion of you. During the Depression, millions of people lost everything. They had debt they couldn't pay, and yes, some of them were destroyed by that experience. But many of them, maybe most of them, lived through it. The bank took the house, the bank took the farm, and the person who lost it was still alive. They still had their hands, they still had their mind, they still had their community. What we don't talk about is what happened next. Yes, many people were broken by it, but many others felt something release. The feared thing had happened, and they had survived it. The shame that the system had taught them to feel about losing their home, about failing to pay their debt. Many people realized, in the actual lived experience of it, that this shame was constructed. It wasn't real. And once you realize shame is constructed, it loses about 90% of its power over you. The modern system has spent decades rebuilding that shame. Credit scores, background checks, references, eviction records that follow you forever. All designed to make you believe that if you fail financially, you are fundamentally damaged, that your value as a human being is diminished, that you should fear this outcome above almost all others. The Depression taught people something different, that sometimes losing everything is survivable, and that sometimes the freedom on the other side is worth more than the security you thought you had. The fifth secret ties all of this together, and it's the one that really kept banks up at night. Financial independence is not about making more money, it's about wanting less. And this is the absolute core of what the system doesn't want you to figure out, because if you want less, the entire consumption economy collapses. If you're satisfied with your home, you don't upgrade. If you're satisfied with your clothing, you don't replace it because fashion changed. If you're satisfied with your possessions, you don't shop, you don't borrow, you don't pay interest. During the Depression, people didn't want less because they were virtuous or because they had figured out some secret path to enlightenment. They wanted less because they had to. But something unexpected happened. They realized it wasn't actually that bad. In fact, in many ways, it was better. Less maintenance stress, less status anxiety, less pressure, more time for things that actually mattered, more presence with family, more creativity born from constraint. The system had to undo this realization. And it did, very effectively, over the course of about 70 years. The advertising industry exploded. The concept of the weekend emerged specifically to create shopping opportunities. Suburbs were designed so that you needed a car, which required loans, which created work stress, which made consumption feel like a reward. Planned obsolescence meant that the things you bought had to be replaced frequently. Credit cards made spending painless. Interest rates were hidden in complex math. The entire architecture was designed to separate you from the awareness that you were working to consume, and consuming to justify working. And here's what's important. It mostly worked. We forgot. The knowledge that the depression had burned into an entire generation, that you don't need much to be okay, that community is more valuable than consumption, that your worth isn't your net worth, got buried, hidden, replaced by a different story about what it means to be successful, to be secure, to be worthy. But here's the thing. Secrets don't stay buried forever. The knowledge doesn't disappear. It just waits. And we're at a moment where a lot of people are starting to ask different questions again. The old answers, more money, better job, bigger house, newer car, they're not delivering the sense of security or happiness that the system promised they would. So people are starting to dig. They're starting to ask their grandparents. They're starting to read about the depression. They're starting to notice that the way their grandparents lived, the way they thought about money, about work, about what was enough, maybe that wasn't actually a tragedy. Maybe that was actually wisdom. And that's where we are. We're at the moment where the depression's secrets are starting to become interesting again. Not because the depression itself was good. It absolutely wasn't. But because the depression revealed something about human resilience, community, and the actual foundations of security that our current system has been working very hard to obscure. If you want to dig deeper into how this specifically applies to your own financial life, how to start thinking about money the way people did before the system convinced us we were broken, I've put together a much more detailed resource in the description and pinned comment that walks through exactly how to start making these shifts. It goes way beyond what we can cover here. So here's the thing that most people miss when they study history. They think the lessons of the Depression are about what went wrong with the economy or the government or the banks. But the real lesson, the one that actually matters to you right now, is about what went right with people. When there was nothing else to rely on, people became incredible. They became resourceful. They became creative. They became community. And here's what's wild. Those skills didn't disappear. They're not lost knowledge. They're dormant, and we can reactivate them. The Depression wasn't a time period that ended in 1939 and then disappeared. It was a moment that revealed the actual mechanics of how security works. And that knowledge, that understanding, lives in the behaviors and systems that survived it. When you understand what those are, when you learn to recognize them, your entire relationship with money changes. Think about this. Right now, today, financial advice comes from two places. Either it comes from people selling you something, investment accounts, insurance products, cryptocurrency schemes, the latest app that promises to change everything. Or it comes from people who have never actually experienced real scarcity, people giving advice from a framework of abundance that doesn't apply to most people's actual lives. But Depression-era wisdom? That comes from people who had to make decisions that actually mattered. Where to spend a dime, how to feed a family on almost nothing, how to build community because that was literally the only safety net, how to distinguish between what you actually need and what you just want. Here's what I want you to understand. We're not talking about going backward. We're not talking about romanticizing poverty or pretending that the Depression wasn't traumatic. It was. We're talking about extracting the actual useful knowledge from that experience and applying it to a system that has become increasingly divorced from reality. The banks don't want you remembering these things because these things represent power that you already have. The moment you understand that security doesn't come from the stock market or from having a 9-to-5 job that provides benefits, the moment you realize that security comes from knowing how to live, from having relationships, from understanding value, from being able to create things, that's the moment the current system becomes optional rather than mandatory. And you know what's interesting? That shift is already starting to happen. There's a resurgence in people learning to cook from scratch, to garden, to repair their own clothes and tools. There are people starting side projects and small businesses based on actual skills and actual community. There are entire communities forming around principles of mutual aid and barter that look suspiciously like the systems that kept people alive during the Depression. This isn't a revolution that requires you to abandon modern life. It's a revolution of understanding. It's about integrating the practical wisdom of people who actually face genuine scarcity with the tools and resources of modern life. You can have both. You can understand how to live on almost nothing, while also using modern technology to expand your opportunities. You can build community and also build wealth. You can learn the lessons of Depression-era resilience without actually having to experience Depression-era hardship. But here's where most people drop off. They watch something like this, they get excited, they think about it for a day or two, and then they go back to their normal patterns because the normal patterns are comfortable and familiar, even if they're not actually serving them. The difference between people who actually transform their relationship with money and people who just think about it is action. Small action, consistent action, the kind of action that doesn't feel revolutionary, but that compounds over time into actual transformation. So here's what I want you to do. Not tomorrow, not next week, today, right now. Pick one thing from what we've discussed that actually resonates with you. Not the thing that sounds impressive or that you think you should pick. The thing that actually makes sense for your life. If it's learning to budget the way people did in the 1930s, start there. If it's understanding why you spend money the way you do, start there. If it's building community or learning a new skill or starting a small project, start there. One thing. That's all. And if you want the detailed guide, the actual step-by-step breakdown of how to take these concepts and make them real in your actual life, check the description and the pinned comment. It's a comprehensive resource that walks through exactly how to start implementing these principles with specific, actionable steps you can take this week. Because that's the thing about Depression-era wisdom. It was never about doing everything perfectly. It was never about being pure or righteous or completely self-sufficient. It was about doing something, consistently, with intention, with community, with the understanding that you have more power over your own financial life than the system wants you to believe. The Depression taught millions of people something that modern life tries very hard to make us forget. You're not broken. Your worth isn't determined by your income or your assets or your ability to spend money. You're valuable because you're human, because you can think and learn and connect and create. And those things, those are the actual foundations of security. Everything else is just details. Important details, yes. Practical details, absolutely. But details nonetheless. So thank you for being here. Thank you for being the kind of person who's willing to think differently about money, about security, about what actually matters. That's rare. And that curiosity you have, that willingness to question the narratives you've been sold, that's the real secret the banks hope you never remember. Subscribe to this channel, hit that notification bell so you never miss when we explore these ideas together, and like this video if it resonated with you. Because the only way ideas like this actually change things is when they spread to people like you. We'll see you in the next one.